What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Big news day, at least from my perspective. If you haven't watched already, I highly recommend you watch the Paul Tudor Jones interview on CNBC. I think this was big news for the market. I'm going to tell you why. Because he explains that he doesn't see the world the way that the Fed does, that inflation is transitory. He thinks that this Wednesday is a huge meeting for the Fed, and he wants to see if they acknowledge the recent data and if they're still nonchalant about what's happening with inflation and they still stick to the theme that inflation is transitory. Because if they don't, his words, he says that it's a green light for all-in inflation trades. In today's episode, I go over in detail what I'll be watching if the Fed is nonchalant about inflation being transitory in this upcoming meeting on Wednesday. Futures Radio Show is sponsored by CME Group, and in July, micro WTI futures are coming to CME. They'll be 1/10 the size of the benchmark WTI futures and will provide traders with a new tool to fine-tune their exposure to crude oil markets and enhance their trading strategies in an efficient, more precise way. To learn more, go to activetrader.cmegroup.com. Futures Radio Show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 feature symbol RTY and micro E-mini Russell 2000 feature symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. All right, let's get into the news of the day, and I think it's big news. And the news of the day is the Paul Tudor Jones interview on CNBC. If you haven't watched it, I highly recommend you go to CNBC's website and check it out. I think for futures traders, or any traders for that matter, or investors, this is an important interview to watch. And typically I don't tune into CNBC, but this one I tuned into because I wanted to hear Paul Tudor Jones' thoughts on whether he thought inflation was transitory and how he'd be playing it. And actually, kudos to Andrew Ross Sorkin, who I'm not usually a huge fan of. I don't think he does a great job with interviews with traders. And I think that he actually did a pretty good job with this one today. And it's because he asked Paul Tudor Jones, if you think this is a bat-ass economy or market, what is the trade coming up, and what is it for not only traders but for the long-term investors? And that's extremely important. When you're talking to Paul Tudor Jones, you don't want to just hear his macro thoughts. You want to hear actually where he thinks money should be flowing to, and that's why I thought this was big news today. And let me go over a little bit about what he said. And he talked about how the Fed is staying on this, that inflation is transitory. We've talked about this a lot on this show. I'm sure you've listened to many other podcasts and watched social media where everybody talking about, is inflation transitory? Is it going to get real hot? How hot is inflation going to run? Are we just in a reflationary time? Are we going back to deflation? You've heard from all my different guests on this show and their points of view. And a plug for this week, actually right after the Fed meeting this week, I'll be speaking with Ira Harris and to hear his thoughts on what Paul Tudor Jones said and what the Fed talks about on Wednesday. Really, this has been the talk for many months, so it's not really new hearing from anybody whether or not they think inflation is transitory or not. But some recent data came out, and this is what Paul Tudor Jones said. He goes, this data was material, and if the Fed is nonchalant this coming Wednesday, he thinks it's a green light, really all in for inflation trades. And I was listening to that and I'm going, okay, take note of this, because he is saying that if they are still talking right now after the data that he's seeing that inflation is transitory, you don't hear Paul Tudor Jones say things like this often where he says green light all in on inflation trades. We're going to get into that a little bit on what I think that what that means for us as traders. But he also talked about, well, he talked a lot about commodities, really. And what I thought was really interesting was, and this is a stat I didn't know, and I'm sure many of you didn't know either, there's $88 trillion under management out there, managers, money managers, but only $670 billion of that is invested in commodities. And he said that there was a big short in commodities right now, especially if the Fed is nonchalant about inflation being transitory, because he said he just doesn't see the world that way. What he really means is that not that there's a bunch of people short commodities. He just means that there's a shortage of people long it. And he really talked a lot about how, if you're a 60-40 manager and you're just invested in stocks and bonds, and he said at these valuations, he doesn't, he said it'd be so difficult. He doesn't see how you could do it. That, what would you be hedging against? Where would you be putting your money? And he just kept saying commodities. And for us as futures traders, that's, boy, that presents a real possible opportunity. We don't know because we don't know how the Fed is going to react on Wednesday, but this Fed meeting becomes extremely important now. I thought it was important anyway, but after you hear Paul Tudor Jones talk about this, it becomes even more important. So you absolutely have to stay tuned to this week's Fed meeting on Wednesday. And like I said, Ira Harris will be on with me right afterwards. He and I are going to talk about what the Fed said and how we think we'll be playing it going forward. But let's stay with today. If you're listening to this on audio only, I'm going to upload some charts. So if you just want to go to anthonycrudele.com and go to the post where this podcast is in, I'll have a bunch of charts there that I'm going over. Of course, you could always go over to YouTube and watch today, because I'm going to pull up some charts of a few different markets, because I want to actually go and see what the charts look like following what Paul Tudor Jones had said. So let's just summarize this really quick here. Bottom line is that he believes that, Paul Tudor Jones that is if the Fed does not react to this recent data, and they're not nonchalant about it, and they're still pushing that they know for certain that inflation is transitory, that there's a green light all in on inflation trades. Okay. Now, if the Fed does react to this, then obviously it's not a green light. It changes the whole dynamic. But I want to go over a couple of things right now, because I think that I kind of do believe that the Fed is going to say, we still believe inflation is transitory. If there's one thing we've learned about the Fed, is that they don't pivot quickly. Okay. And I just don't think that this Fed is prepared to go back and change the way that they've been playing this the whole time. I think that they're fearful of doing that in a lot of ways. So I think that they might do some things in the future, but I don't think that they're going to pivot too hard at this meeting. So my guess is that they are going to be nonchalant, and going back to what Paul Tudor Jones says, is a green light in for all inflation trades. What does that mean to us as traders? Now, I'm going to go to the charts now, and I pulled up crude oil, and that's what I have up here as I'm talking right now. And I've been saying lately, everybody's been asking me, what are you trading? I haven't been really trading S&P or NASDAQ as much, really at all, to be quite honest with you. A little bit of NASDAQ, but very little. Mostly Ethereum. And I've talked about this lately. I've been trading a little bit of gold and a little bit of crude oil. Why? Because they're cleaner looks. And if you think about inflation coming, crude and gold are going to be two markets I'm going to be absolutely focused on. And also crypto. I had a show earlier in the year with Allison Reichel, and she talked about how crypto is the new hedge against inflation. Believe it, don't believe it, doesn't really matter to me. I look at it and I think that crypto will be a play here. I think that oil, gold will be two of the top of my list to play going forward. I think that those markets they're going to have a lot of volatility for one, which I like. And if we believe that the inflation trade is hot, that it's not going to be transitory, going back to what Paul Tudor Jones said, and the Fed is going to step back on it. Those are just two markets I feel like there's going to be edge and opportunity in. So I want to go to the charts with crude oil first. And I pulled up here on TradeStation on the daily, and I talked about this in Develop Your Edge a couple weeks ago. And I said crude has just been setting up for a long again. Consolidation for a period of time, as I'm looking at the charts here, off that high. We recently took out the recent highs. And what do I always say? Identify the environment. Look at the charts to identify the environment. Use some basic tools to identify the environment. And I always talk about Bollinger Bands. I say this all the time. I think that they're the best tool for it. And how do I go about doing that? And what I look at here is I have my Bollinger Bands up, 20 period, 3 standard deviation. I also have some moving averages here. I have the red is the 10-day moving average, green is the 50-day moving average, and the magenta is the 200-day moving average here in crude, which I want to look at right now because I want to see how strong some of these trends are in the markets that we're going to go over today. And when I look at crude oil right now, hugging above that 10-day, Bollinger Bands are expanding outside this previous peak high and peak low. Volatility is expanding. New highs, smooth Bollinger Bands. Mouth is opening up. I'm bullish crude oil. And I'm putting my money where my mouth is. Each and every day, I'm looking for using my shorter term charts to execute crude to the long side and trying to establish some longer term swing positions, trading around a core position to the long side right now. Got to do your own research. Like I said, I'm not saying that you should go down and get long crude oil. Of course, you know me by now. I'm teaching you how I think, not telling you what to think. But I really look at this and I say, man, how far could crude go? And I have it on the daily here. I think that we are just in grind up mode, and I go to the weekly and I look at it and I say that top Bollinger is at $75. I look at these old highs over here. This old high was 74.10, and then you have another high over here around 75.47. I think they're headed to those highs. I think they're going to look to test them, especially if we come out this week. And I'm not going to get into what the crude oil numbers are this week. I'm looking at this on the inflation trade and just, I think the fundamentals, and there's a lot of things going behind crude oil right now that are going to be a positive for it. But if this Fed doesn't do anything and it stays the way we talked about, been discussing so far, I think crude oil is going to be a hot market to trade. Either way, right? Even if it starts to pull back, I still think there's going to be volatility, good market for day traders. So I'll be looking very closely at crude oil. But I think that these recent highs, boy, I got to tell you, I love the look on the daily. I'm going to go back to it again. It just looks clean to me. And I just feel like, crude oil, and I actually been talking about this for several months. I said way back here, I said I think the low is in crude. I was long it for a period of time, actually got stopped out. It got a little choppy and reestablishing longs as of late, but I really think I'm only looking at longs in crude oil right now, and this just fits into an overall theme. We also talk a lot about on this show that having an overall theme, what's happening, and even the guys that I have spoken with that think that inflation is transitory still think it could get hotter before we start to see any deflation come. So it's even the people that think deflation is possible or we're in a reflationary time still think that it could get hotter than it is. So definitely this Wednesday is going to be a huge day. And of course for commodities, which I'm actually going to go to next, which I think, obviously this is Futures Radio show, but actually this weekend I was on with Trader Lion, and hopefully you tuned into that. They did an absolutely amazing job with their conference, and I'm actually very thankful that they invited me to come there and speak. And I talked about a commodity index that I was trading earlier in the year. Now, of course, this is Futures Radio show, and I think obviously with all the different products at CME, pick the markets that you want. I think this is going to be hot for soybeans, corn, wheat. Just commodities across the board. But I think that for me also, when Paul Tudor Jones was asked as a trader or as a longer term play in my longer term portfolio, I like this USCI. I think, I was long this earlier in the year. Actually had a sell signal that came out of my daily stuff, as you can see right here. Anytime these Bollinger Bands expand and then they start to contract, that to me is telling me that the trend is over. Was long it, made a nice little chunk in it earlier in the year, got out of it. Of course, right when I got out, it went up and made a new high again. But that's for a whole other conversation. But I will be looking to reestablish this in my longer term stuff because this is just another way to play inflation on the longer term. And, of course, I'll be looking at my futures markets. Like I said, primarily crude oil is going to be the one I'm going to be playing a lot. I don't really trade the softs too much, but if you are a trader out there, I actually should be doing a show on this after this comes out this week, this Fed meeting. I might be bringing on some traders that trade the softs to talk about that and see if there is opportunity. But, I like this as an ETF for, playing a hedge against inflation. Paul Tudor Jones said that he believes that there is, like I said, he said there's a short to where there's an opportunity for 2-3 times move higher in the commodity space. As intraday futures traders, that's going to be, we're primarily going to be looking at one side, the long side, maybe some short opportunities if you think they get overblown. But I really wouldn't be looking at that at all. I'd only be looking long if that's the play, if that's what ends up happening. But on the longer term stuff, a way to just put some stuff in your portfolio, I like to go and look at stuff like this to kind of just sit in it, or even just using options on some of the primary futures markets that you're looking at, just so you could sit and not be maybe getting chopped up a little bit with the volatility, because I do think it's going to be very volatile, which is great news for futures traders. So I like this play. I really will be looking for any sort of pullback. New support for me in the USCI comes in at 40.23, and then 39.31 is the 50-day. Man, if they got back down there, I would be in a full position. Anything in the mid 39s in this USCI. This is one of those things where you may not even get much of a pullback. If I see this news come out or on Wednesday and I feel like the Fed is still acting as though, no big deal, inflation's transitory, this is something that I would buy and add in my portfolio, and stops would be just below the 50-day moving average. Always know where you're getting out before you're getting in, and that's something I'd be looking at. So it's just really something to play. Now, obviously, if this doesn't happen, I wouldn't be doing that. If the Fed does something and they start to react, then we'll be doing a whole other show with Ira at the end of the week to talk about what that would be. But this is something I will be keeping up on my charts. And also gold, silver, and Ethereum. I'm going to pause for 45 seconds. And when I come back, we're going to talk about the metals and we're going to talk about crypto. I'll be right back.
Replace your exchange with TradeStation Crypto. Dealing with multiple exchanges is complicated and it takes time, except with TradeStation Crypto. Because we are not an exchange. We are a broker. You have access to multiple pools of liquidity, all in one platform, in one account, one way. Trade crypto your way. Plus, earn interest on your eligible cryptocurrencies. Get started in one click.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. All right, welcome back, traders. Got a chart up here of gold, and I'm bullish gold. I think inflation or deflation, honestly, Darius Dale, his interview, probably one of my favorite shows this year. And he explained to me that even gold can do well during deflation. I asked him that question. I mean, definitely go back and listen to that interview with him. I think it's, I learned a ton from it. So I think it's important to kind of know what his thoughts are on if we do get the opposite of what Paul Tudor Jones talked about. It's just really important to hear, I think, Darius's point of view on that and what markets you'd be looking at. And gold was a market that he mentioned, could be bullish during a deflationary time. So I think no matter what right now, I know that's kind of crazy to say that, but I think that gold is a good buy. I think that gold is something that I'm looking for on the long side. I've got gold in my portfolio right now. I've been trading around a core position. I am not getting aggressive with gold, and I talked about this a little bit this weekend in the webinar. This is a very small position for me right now because I do think that this is going to be choppy, because I think that gold can work in either environment, that I think that there's going to be a lot of push and pull. I think eventually it will work to the upside. We go back and look, and I think there's a really good low on the chart when you go back and look this year. Like I said, I have a gold daily up here on TradeStation. Double bottom basically back there, reestablished a back above my support areas, above my neutral, pushing through resistance, crossed the 200-day moving average, retesting it as of late. Really just been holding pretty well above the 50-day as well. I like moving averages for this because it helps me identify the trend. Where I start to puke my gold longs below the 50-day moving average, any close below that, I don't think we should see that now. And that's actually not too far from here. It's only about 40 points away. So anything below 18 and a quarter in gold, if we start to make a move down below there and get a daily close below it, I'd probably have to exit gold and just wait again. I've learned my lesson with gold this year is that every time I've pressed it, it punished me. And how bad I wanted to press it back up in here when it was holding above the 10-day moving average. And I thought to myself, don't do it. And rightfully so, because as I was trading around a core position, I have been stopped out of some of them and still keeping a core long position. But I really like gold. I think that it's just one of those things. I've just got to dial it back. I think that it works in both scenarios. And as confusing as that may be, I really do see that. And I think that you just got to keep it small, light, and tight, man, because it's just gold is tough. I mean, there's a lot of battle with this and crypto. I'm actually going to go to Bitcoin next. Actually, I'm going to go to the cash, not the futures. And I'm going to the cash because I just get longer time frame here on the charts. This is a time where micro Bitcoin futures to me actually become a really good product because I own crypto. I own some Bitcoin. I like the futures as a great tool to hedge against my cash positions, whether it's Ethereum or Bitcoin. But I think that crypto itself right now, when you look at it, I think Bitcoin really obviously struggling here. But I think that if inflation is a concern, I think it becomes once again a hot topic. I think everyone's going to be looking at crypto if it starts to move up again from here substantially. Bitcoin is not something I'll be trading as much. I'll be using the futures more, even though I have the cash chart up here. All I could see here, and I've talked about this quite a bit on all of my shows really, is that when I look at crypto, when I look at Bitcoin specifically, we're going to get to ETH next, but I look at these Bollinger Bands, I feel like they're boxed in. It did hold the 200-day moving average, roughly 33.9. It's holding back above the 10-day moving average here. 50 days way up there at 48.4. I think it's a range-bound trade. I really do. I don't think Bitcoin does much of anything. I think it's stuck here because my Bollinger Bands tell me that we're boxed in. But I'll watch it to see, how does it react if the Fed thinks that inflation is transitory and nobody believes it? Does it start to get a run? How does it trade? I felt that earlier in the year when inflation was becoming a hot topic, Bitcoin ran much further, obviously, that's going without saying, than gold did. Can that happen again? Maybe they both go up. Maybe gold is going down and Bitcoin's going up, or gold is going up and Bitcoin's going down, or they're both going up together. I'm just putting stuff out there because that's how I'm thinking. I want to see it. Bitcoin to me really is going to be a hedge against not inflation. I'm going to be using Bitcoin futures to hedge against my ETH or my Bitcoin positions. Now, why would I use Bitcoin to hedge against my ETH? Because I think that no matter what happens with ETH, I think that Bitcoin needs to go up. I pulled up ETH now on the chart. And the days I think that crypto is just getting smashed, instead of selling my ETH, which I still may do some of that, I'm in a full position long ETH now. I'll talk about that a little bit, but I will use Bitcoin futures, micro Bitcoin futures, to hedge against that, because I think that if ETH and Bitcoin are going down together, then I'll just be going to the Bitcoin futures. ETH futures are a little big for me to be able to do really more precise hedging. Hopefully CME pulls out a micro ETH. I think it's important because, it's 50 ETH. You're not really getting too precise of a hedge depending on how much ETH you have, but maybe for a flip here and there, I'd use it, but I'll go to the micro Bitcoins for this. And when you look at ETH here on a daily, and I've talked about this quite a bit on my Twitter stream and on all the shows really this year, ETH has been my hottest trade, and really it's what I've done the best so far in this year. And I did get stopped out. Talked a little bit about that even this weekend in the Trader Line webinar. I've talked about that in Develop Your Edge and on the podcast. Got trailed out, stopped out of some. Have a core long position that I've been buying really since the beginning of the year. Been very transparent about that. And this recent low down here that held my light blue, which was the 2300-ish area, it held it. And I talked about this even this weekend in the webinar. I mean, I am bullish, and I think that I have very little to add to it at this point. I've been continually adding to it every time we've been holding around above 2,300. Multiple tests of it now. I got chopped up a little bit back a few weeks back on it, in and out of some of it, but this thing is holding now. I think that 3,100 is coming in ETH. I think it's coming within the next, I think it could be there in the next week. I think 2 weeks would be at the most. If this trade's working, it should happen soon. I'd really like to see in the short term reestablish that 50-day, which comes in right around 2760. That to me would then give it a nice push, because you got these multiple tops in here right around the 28 to 2850 area. And I think this week, if the Fed comes out, and like we said, going back to the whole kind of theme of today's show, if the Fed says inflation is transitory, I think crypto is going to get a lift. I really do. I mean, if they don't, who knows? I think that crypto will struggle in a deflationary period. Another thing, I'll go back to Darius. He talked about how ETH he thinks would struggle in it. I will keep that in mind, but as of right now on my charts, ETH's looking really, really good. And that's what I'll be playing. Obviously, I think it looks good because I'm talking my book. I got a full position. Once again, do your own homework. I'm not telling you to buy ETH, but that's what I'm saying. And next is silver. When I look at silver on the daily, and I'm not in this market right now, and this market to me, I'll be perfectly honest with you. It's chopped me up quite a bit. I'm actually glad there's micros on this because this is a much better, micro's a much better product for me than the bigger silver. I'm just flat out not a good silver trader. Even when I'm right on it, I somehow lose money. I don't know how that happens up to me, but it's just a tough market. And when I look at it on the daily, I feel like, gosh, I mean, Tavi, Costa, so many people I watch keep thinking this thing is going to break out, and it just sits here. I think gold and silver, in all honesty, I think that I'm pulling up a weekly here on silver to give better perspective. These are markets where I like them, but you got to be just small because they just don't do it. And then all of a sudden they do it all at once. It's so difficult to time. It's so much about timing. And with futures, they're leveraged. It's like, and I tried to be small in these. Talked about this with gold, even using some options. With ETH, I'm not using any leverage. I don't use any leverage in crypto or Bitcoin. So it's a little bit easier to withstand the volatility. Still not that easy, but that's what, that's why I look at silver and go, I think this will get high. I think if it starts to get legs here and gets above this recent high of 28.90, you start seeing this thing push above 29. Whew. Then I start getting in. I probably use micros for this because I think that silver and gold, oil, ETH, Bitcoin, that's what I'll be looking at. Hard for me to say that after all these years as an S&P and NASDAQ trader that these are the markets I'm focused on, but that's where we are. Where are we? Where's the environment? That's what I see the opportunity. That's what I'm trading. That's it for today. Stay tuned Wednesday to this Fed meeting, and Ira Harris will be following it on Futures Radio Show podcast. That's that night. Going to be a busy day. Keep your powder dry until then. Have a great week. See you Wednesday. Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.